Yeah, you want to. As Mitch here from Wealth Planning Partners, I'm here with Chris Lamb again. We're just going to go over some life insurance stuff. So, Chris, if you want to say hello to everyone in the chat.
G'day, Chris from Action Insurance Brokers.
Alright, so like I said in the last video, we're going to talk about some life insurance, your life and TPD, your income protection, your trauma cover, all that sort of stuff you have inside your superannuation policies. Just another quick disclosure before we start. Legal requirement, we have to disclose that all of this is general advice. It doesn't take into account your personal situation, your goals, your objectives, or the relevant PDS for the relevant products that you guys currently hold. So with that over and done with, we can get back into it. So Chris has a life TPD and an income protection policy through us, and he's got a couple questions. So I'm going to hand it over to Chris to ask some questions.
Yeah, thanks, Mitch. I suppose I've just got a few general questions I just wanted to ask you, just from a general perspective for the viewers out there. So if my work required that I hold an income protection policy to get on site, and I haven't looked at that in a few years, what options can I do for that?
Alright, so if you've got an income protection policy that you've had for years because you needed it to get on site, more than likely the markets change very quickly all the time around income protection, life insurance, that sort of stuff. It changes a lot. So newer products come out, they're priced a little more friendly than some of the older products. There's lots of things you can do. So you can change provider, you can reduce your sums insured, that sort of stuff. You can extend your waiting periods and your benefit periods, that sort of stuff to save on premium. So also, if you are struggling with your premiums, there's an option to move your income protection inside your superannuation policy, so you'll still have cover and you can still provide that certificate of currency that's required to your employer so that you can get on site. So there's plenty of things you can do, but I definitely stress you speak to your advisor before you go ahead and just start changing things willy-nilly. You may think that you can just extend waiting periods or move providers, but there's a lot of stuff around that needs to be taken into account before you change things like that. Have you got any other questions there, Chris?
Yeah, so you mentioned that there are ways to change the structure of your income protection policy to reduce the costs coming out of your own pocket. How exactly does that work?
Alright, so if you're holding an income protection policy, what ends up happening if you can't make your premiums, you have an option to change the ownership of the policy, which means that your superannuation fund will own the policy and the premiums will be direct debited out of the superannuation account to pay for the premiums. So there's a couple of things you need to know about doing this. It's classed as a cancel and replace. So depending on the insurance provider, sometimes they upgrade the product for you when it goes in, so you'll get a benefit out of that. But if you move your income protection policy inside of superannuation, you'll end up losing that tax deduction that your accountant's allowed to apply to your income tax return every year. So you want to think about that before you move it in. It might be beneficial to retain it outside and reduce it, or change providers before you just go changing it into your super account. So that covers that off. Any other questions there, Chris?
Yeah, so if there was another insurer who's offering a good price, is there any consequences with me changing to another insurer?
Yeah, so holding an insurance policy, what happens is when you take that policy out, it gets underwritten at the time of application. So underwriting's where they do all of your medical and financial history checks. So if you have had a bad back or you've been to the doctors for something other than the flu or something like that, and since you've taken that policy out, what can happen is they can apply loadings, exclusions, that sort of stuff to the policy. So a loading being, they put a percentage on the premium on top of the standard premium, load the premium essentially, to make it more expensive,
Yeah.
but you'll still be covered. Whereas an exclusion,
Yeah.
what they'll do is they'll just cut the whole, so for instance, if you have cancer, they'll cut cancer full stop out of your insurance policy. So any claims relating to cancer, you might not get paid. For instance, very often in the tradie side of things, the blue collar, that sort of stuff, they have back injuries, knee injuries, shoulder, elbow injuries, that sort of stuff. If you've had an injury and you've had surgery on it, usually within the last 5 years, or you've had symptoms within the last 5 years, insurance companies will exclude that. So if you've done your right elbow or your right shoulder, you'll end up with a right arm or right shoulder exclusion, which means if you hurt that shoulder again and you're off work for 6 months, the insurance company won't pay out. So it's definitely something to think about before you change your provider straight away. On saying that, if you don't disclose that sort of stuff to your insurance provider when you set up new insurances, what they'll do is they'll say, we wouldn't have taken this policy out had we known that, or they would have said that we would have applied exclusion at the time of applying for this policy, and therefore they'll void paying that. So it's very important that you're very transparent with your insurance company. They're not like Facebook, they're not there to take all of your medical information and use it to flog products to you. It's all to make sure that they're not taking on sick people. So it's very important that you disclose that and not get done with non-disclosure, because if you end up with non-disclosure, they'll either void your whole policy or they will refuse to pay out on that specific condition that relates to that injury or event. So definitely something to think about. Is there any other questions there, Chris?
Yeah, I just wanted to also, I suppose, just last question. So if I have my insurances at the moment direct with an insurer, can I then go through an advisor like yourself? And also, what are the benefits of putting my insurances through an advisor rather than being direct with an insurer?
All right, so a lot of you might already hold superannuation insurance and possibly not even know about it. So lots of superannuation providers have life and TPD as a standard product inside their superannuation policy. So if you hold a Sunsuper account or an Oz Super or a Host Plus, that sort of stuff, there's usually a life and TPD component. They're very basic. They don't take into account any of your needs or circumstances, and they just apply a weekly premium to your policy. So that insurance inside superannuation also has very, I don't want to say poor definitions, but it's not as complex as a retail life insurance policy. There's a difference between a retail life insurance policy and a group life insurance policy, and as Chris was getting onto, a direct insurance policy. So direct insurance doesn't always cover all of the definitions a retail life insurance policy will. To try and put it in simple terms, the best way to dispense between the two of them, the retail life insurance policy is like your fully comprehensive policy, and then you've sort of got like a less formal product like a third party fire and theft, that sort of stuff. Is like your general insurance and your superannuation insurance. So some of those policies may be relevant to you, and you, like I said before, you might have pre-existing illnesses or injuries or something like that, and it's worth retaining that cover. Whereas if you're in good health, you might want to look at upgrading the product. Retail life insurance isn't any more expensive than group um, or general insurance. It just depends on a factor of things like your age, your BMI, your occupation, that sort of stuff. So yes, you should really look at holding it through an advisor. An advisor will be able to tell you whether they can help you out or not, and it doesn't generally cost to speak to an advisor. So if you want to ask a couple of questions, please feel free to call us. We'd be happy to let you know the differences between the products. If the products that you currently hold, you have some questions about them, we can get some reports that show you the difference in benefits and features between general products and group products and retail products. So it's definitely good to ask an advisor. Whether you choose to go ahead with the advice or you choose to take out a group product, it doesn't hurt to ask the advisor before you take out a policy. So if you want, like the last video, I'm going to put our contacts in the description, and I'll put a little slide at the end of the video with our contact numbers on it, so you can get in contact to ask about these sort of things. So have you got anything else there that you'd like to ask Chris before we close out today?
No, that's it. I just wanted to, I guess, finish up with, yeah, if you have any general insurance related questions, feel free to give me a call. Always happy to have a chat.
Alright, no worries. So, and again, all our details will be in the description and the slide at the end of the video. So, we hope you guys doing alright, and if you do have any questions, please don't feel obligated to ignore this. You can give us a call anytime or leave a message if we're busy. We'll definitely get back to you guys. Alright, well, that's another video done for the COVID-19 update. If you guys have any further questions, please leave them in the comments or contact us. See you later, guys.
See you.